back to a follow-up. As I said on the last video, that the fear indicator is working off the bottom, just like I said it would 10 minutes ago, and there is the reversal. That's when you look at shorting things like this off the high for $2. As I said to Scotty, you will come down $2 off of that high. And I said it an hour ago. And the market's been open an hour and a half. What I want you to know, in the volatility structure, you had a big left elbow gap down on the Nasdaq comp and a runaway right there. Left elbow buy came right in and reversal came in. That's going down. When that goes down, this goes up. When this goes up, because it's this one right here, that means that Apple, that means that Google, that means Amazon, Priceline, all of them will fall weak. This is volatility. I'm sorry to tell you. There's a mathematical ratio to trading volatility. And I will be happy to make sure that people are understanding what they need to understand. As far as the SMF left elbow gap down, that was a left elbow gap with a runaway buy and a right elbow gap on the fear indicator and straight down, and those were good long trades right off the bottom. And this is how the stock market's going to be for a number of forward-looking months and will not change until the foreseeable future, until I say that the system will tell us when those changes will come into play. But once again, I am going to show the beautiful moves right out of the gate. Here is Apple Computer. When that VXN went straight down, notice that Apple had a right elbow gap up. The fear indicator started to come down, and you could see where we shorted Apple up here. You could see that with this breaking higher, you're getting weakness in the trend. This is when you want to be short. You want to be long when this is going down. You want to be long the Apples, the Googles, the Amazons, the Pricelines, the Baidus of the world. Because that meant that when this was going down, that Apple hit a gap and went straight up until it got so overbought. It got so overbought. I mean, for Christ's sake, how much more do you want it overbought? Don't you think that 94% or 94%, there was a time where there was 96%, 94% meant that Apple had to come down and that it was a short for that intraday, and it paid you money. It paid you money long and it paid you money short. That's what the system will teach you here. If I break higher here, this is a volatility, folks, and it's pretty horrendous if you don't understand it, but we make it quite simple for you. Anyway, welcome to stockmarketfunding.com. There are lots of mechanics, lots of inside things that go on in markets that unfortunately people have never learned correctly. And in my view, I'm not putting anyone down, I'm just saying that our system works right. And that these left elbow gaps down to 124, you had a $2 move. That's called the bottom up left elbow gap down, and you buy and you ring that cash register and forever hold your peace. Because that's how it's done. Goldman Sachs, $2 short off at a high. Peter Brady was on it. That's the way it is. Stay tuned. And if you go look on the stockmarketfunding.com website back in January, I put a lot of the VIX, a lot of the VXN up there. You can see what it was doing then. You can also compare to what it's doing now. And basically what I want to tell people is that they're trying to burn that bottom, which is good. But the problem is that the bigger picture is that stockmarketfunding.com just concluded its year-end report. If I were you, I'd stay tuned for that one. We haven't been wrong yet. So basically, but we're right about that move there. We're right about that short there. We're right about the gap sequences that SMF uses and traders trade with. And basically, as we go higher back up, stocks will fall intraday. And that's the volatility.